Hey everybody, Michael here. This is your first diamond level video, everybody. This video is, I'm going to give this video to everybody for now, and then every single diamond level video after this will only be for diamond level members. A lot of you guys have been asking, what am I going to be talking about? So that way everybody gets an idea of what you guys are going to be looking for here, and, and some other stuff, because we're not just going to be talking about technicals, we're also going to be talking about some of the fundamentals here, but that's for another video only for diamond members, okay? All right, but today we're just going to go through each one of these 5 charts here and talk about certain levels of support and resistance that you guys need to be aware of in a specific order. And to that same effect, if you guys want to add these same technicals onto your own charts, I'm going to be telling you how I set up these particular Ganfans. Not showing you, but just telling you the numbers I use for these examples, okay? So first of all, we got Apple. All of these charts have log on. I just want to start that off. All of these charts, if you're adding any of these technicals onto the screen, they all have log on. Now, what we're looking right here for Apple's price in particular is we're using the lows of 2020, the COVID lows during that little bit of a crash that we saw. We've set up 2 Ganfan levels, one at the 45-degree angle and one coming down from the negative 45-degree angle. And you can see I've taken off a lot of the excess lines here. The only line that I'm using right now in this actual chart is the 2-to-1 going up at the 45-degree angle, and coming down I'm using the 8-to-1, this creamish color, if you will, peach color, and then this hot pink is the 4-to-1 Ganfan level coming down as well. Those are the only Ganfan levels you can see on this chart. When you guys set it up, you guys will be able to add any lines you guys want onto the chart, but right now, a lot of these other lines are useless for what I'm looking at now. I'm specifically looking at these 2 Ganfan lines, okay? So, according to this chart, and you guys will have a lot of data, so please write this down or type it down if you have a couple monitors. There's going to be a bunch of support levels kind of around this area, and it's going to be important that you guys see where the big support level is. When we drop below that one, that's when you're more likely to actually open up some short positions here or some put positions into this Apple, okay? So at this moment in time, the Fibonacci level also started here at the lows of 2020, and we've been riding it up all the way up here to the highs, and now we bounced off of our first Fibonacci level after breaking down below this particular Ganfan, the 8-to-1, okay? Now, if we were to break down below this, guys, your next level of support is really going to be around $130, $129. We'll talk about why you might want to be a little more careful there, breaking down below this Fibonacci level in the next few minutes. But for now, guys, what I'd be looking for is just a clean breakdown below this Fibonacci level, and that'll give you some optimism without all the other technicals that we might be breaking back down to at least the 130 level, if not a little bit below that. But that might be a good opportunity if you guys wanted to take a 1 to 2 day trade, because this market has been very choppy. If we do break down below that level here, and this is a weekly chart, just in case you guys didn't understand that. Let's say we break down below it. That means Apple should go down about $6 or $7, which will be great for options, especially if you guys want to buy puts. That can give you anywhere from like 50 to 100% profit if you guys are buying within 2 weeks of expiration. That way, the options are going to be more volatile, okay? Excuse me. So keep that in mind, 130 support level here if we do break down below the Ganfan level, the Fibonacci level, excuse me. And right here at 137 is the level for the Fibonacci level. So if we break down below that one, that's where you guys could start opening some puts here. If you go check this out on the daily chart, you'll see that we have actually never closed down below this level. For now, we're kind of bouncing around, but if we do break down below this Fibonacci level, it should be a nice little bounce of support, maybe a little bit of a rally. We'll see. Sometimes we just keep on going down, but there should be some type of either a small scale opportunity here, or you could either just hold on to them, be a little bit more aggressive, and see if it does continue to break down. I'm more cautious, so I would start scaling out probably around 133, and then probably by the time we hit 130, closing out the rest of my position, then looking for an opportunity to open up another one. But that's my conservativeness, okay? So that's all this particular chart will tell us right now. Just some of those key levels. Again, 137.38 support, or if I'm going to be exact here, $137.16 as support. And as far as the Ganfan level over the next 2 weeks, we can actually just zoom in here just so you guys have an idea what to look for. For this week, it's going to be at $128.65. Going into next week here, it's going to be around $129.72. So a teeny bit below 130, okay? Now let's move over to the other one. Right here. On this one, I kind of went all out for the Ganfan level. So you're going to see a lot of Ganfan levels that just look like these blue lines here. And that's because they're all 2-to-1s. There are tons of other levels on this chart that kind of go all over the place. Some are more useful than others, but I just wanted to have this this kind of idea of what I'm looking for. So these uses the lows all the way from like 1982 going all the way up, and how they have been important. They're still important, guys. They're still important here. But you know, we normally don't look at stuff because we talk about crypto most of the time. We don't look at stuff that's been around for decades and decades and decades. But okay, but basically, so I can help make this a little bit easier for you guys. If you guys wanted to do this, this is something you don't have to do. This is something if you just want to see some really big moves and you want to see some historical data as far as Apple is concerned. If you guys want to do some like larger moves, like long-term options, or if you guys want to get ready for like the next big bull market, stuff like that, this is how you would start to set some of this stuff up. Okay, I used a Ganfeng level from July 5th, 82. That's weekly chart. June of 85. June 3rd of 85, excuse me. Going back over here, we had January 5th of 98. Over here, January 26th of 09, right after the financial crisis. Over here, I used April 22nd of 2013. And zooming in here a little bit more. What was this one? Yeah, December 31st of 2018. And then over here, March 23rd of 2020, COVID drop. And then that's all I've used there. And then as far as the two downward 45-degree angle Ganfeng levels, I'm using March 23rd of 2020 negative 45-degree angles, and then December 24th, or December 31st, excuse me, or about of December 18th, okay, or 2018, excuse me. And then so what I have for both of these is on this first one, it's the 8-to-1 Ganfeng line. The hot pink one is just too far down for me to care about it right now. As Apple continues to fall, we'll figure out wherever its bottom is. We'll be adding and switching up some of the Ganfeng levels so they're not looking so cluttered. Okay. The main reason this is all not on one chart is because it would look incredibly cluttered, and I just mean incredibly cluttered. All right, and then on this other Ganfeng level here, going down negative 45-degree angle, we have the 8-to-1 and we have the 4-to-1. The 8-to-1 you can see right here did not really do us much good. I think this 2-to-1 from a while ago, that was much more helpful. We bounced. So as I'm looking at this one in particular, I don't see it being a really great help for us. I tried to check it out on the daily chart, and it was still kind of choppy. We bounced off of it one day, but as I look at it, it still looks like we really just bounced off of this 2-to-1 here. And so because of that, I'm not really giving much weight to this. I just wanted to show you guys it was on the chart, but because of how it's looking, I'm not really giving much weight to it. I am going to keep this line right here on the bottom here, just in case it does come into play later on. But I mean, by that case, you know, Apple would be coming down to $100 or so. That'd be kind of drastic. So for now, I just wanted to show you guys I had that on there. I'm just going to keep the 1-to-1 on the chart, which most of you guys won't actually see. What you guys have to be aware of right now as well is just that Fibonacci level down here at about 136.72. If we were to break down below that level, kind of the same stuff we were talking about earlier, we would most likely be coming down to our next Fibonacci level from a long scale. Here, let me go break it down a little bit better for you. The Fibonacci level that started after the 2018 drop, so this is like January of 2019, that Fibonacci level right here, that next level of support we would be looking for would be at $124.00, okay? And that's all this chart tells us, okay? We're gonna have to go through a lot of charts, but we're taking the little nuggets of information of it, okay? But according to this one, excuse me, here, we have already broken down below it, and we went choppy. We're going choppy. Usually after we break down below it, it's okay if we get choppy, but ultimately we tend to go down after breaking down below some of these major 2-to-1 levels. And that's what I want you guys to get from this. Everything is still pretty bearish at this point in time. Now, and we'll talk about the optimistic side of Apple here in a second. All right. And the last one, as far as the Ganfeng levels and Fibonacci retracement levels are concerned, excuse me. We're going to be using the negative 45-degree and the 45-degree angles coming from the low of December 31st, 2018, doing the 45-degree angles there, plus the Fibonacci level coming down, all right? Now, as far as this one's concerned, we would only be using it from after this point right here, this high. We did have a few bounces here. We came actually below this Ganfeng level, and we actually managed to like break down for a little bit of time, but it bounced off of the 50-week moving average, which is kind of unusual because usually when you're breaking down below Ganfin level, it usually kind of just keeps on going, as we talked about that. So it seems as if this 8-to-1 usually on Apple isn't being as reliable as I would like it to be, frankly. If we go over here to the daily chart and we just take a look at it, you can see for 1 day, 2 days, we were down below it. On the third day, we managed to get back up. And that was more of that bear market rally that we saw. So I think that was more of investors, primarily of hedge funds and the bots that they use to trade. They figured out like, hey, the whole everybody's just buying. Let's just bring this rally back up. And I think this was a little bit more artificial than natural. If you guys remember this, everybody on CNBC was kind of like, what's going on? People are pumping up the prices so they can sell at better rates before they eventually dump it. And of course, that's what's happened here. Hedge funds are no fair actors, if you will. And then as soon as we broke down below the 2-to-1 Ganfin level, again, choppy, came back down. Pretty similar to what we've been seeing before, only now as far as the next Fibonacci level of support that you guys need to be aware of is all the way down here at $126.77. That way you guys can plan out some longer term options if you guys wanted to, because usually we would hit that 130 level that we talked about before, bounce back up, and then of course come down. But if you guys have longer term options, it's not going to hit you guys as hard, okay? You're not going to be making as much money, but you're not going to be hit as hard if it does do a little bit of a reversal for a few days, okay? Now, here's something I don't usually go over in the channels, in the streams very much, because it's just kind of an annoyance to put this up. And these are Fib Circles. Let me see the technical name for it. Yeah, just Fib Circles. They have weird names depending on what platform you use. But basically, what I use these for is levels of resistance and kind of opportunities to buy once they've been broken out. So let me see. I'll show you here. So I would have had this whole circle thing done by this high right here. And you can see we bounced off of that Fibonacci level right there, the Fibonacci circle level, if you will. At this point in time, I just want you guys to understand that as we kind of zoom into this, and I'll make a video showing you how to do this. That way you guys can copy this one as well. But the level that you guys are going to be watching for over the next few days is going to be right around 134, 135. If we manage to close down below that level, we really do have a great opportunity of running back into that Fibonacci support level all the way down here of 123. Kind of talked about that 126, 123 level a few minutes ago. But then ultimately over the next few months here, if we don't see a good reversal, then Apple can come all the way down here to this side of the circle, or this specific circle, or this line, if you will. And that might take it all the way back down to 117, 118. But more likely, maybe we might hit some resistance over here of 125, 127, which will be very interesting to see. These are usually very good levels. If you buy off of a breakout, usually you can make some good money off of it. This one was good money. This kind of got choppy, went fine. Found some support here. Found some support here. As soon as we broke out in there, good money. And then we found support there. And you can use these a lot. I have two that I'm going to show you guys today. This one starts all the way back here in 2018, December 28th. All right. And basically what I've done is, you know how you draw Fibonacci levels and you find a low and a high and you just kind of drag it like that, right? To the high, to the low. Well, what you do for Fibonacci circles, and I'll make a video kind of going further into this, is in this example, because I want to go further out in time, and I just don't want to see like the half of it. If I drew a Fibonacci level just using that same technique of just the low and the high, what I would get is this. Totally different, okay? Not what I'm actually looking for. As you guys can see, the circles really don't come too far out here, right? We actually haven't come into contact with that circle yet. And the next time we're going to come into contact with this circle is if we have to, it has to take some time to get out of this blue circle, is basically what I'm saying. In order to fix that, what I do is you make a square from here to here, and I'll make a video about this, a square from here to here, and then what you do is you copy and paste it, and then you drag that square back over here, or that rectangle, and then you try to make it as flush as possible with these lines here, and then you draw the Fibonacci circle from here, and then you drag it from all the way out here. That way it's squared. Staying away from too much math in this part of the video. But the main thing I want you guys to understand here is that we do have a support level. Let's go back to the weekly chart. At this point in time, at about $134 next week, that's going to move up drastically to $136. And then finally, all the way up here. Oh, let me see. Let me make sure I'm doing this right. 2 weeks, it'll be at $136. And one last thing here, guys, on this particular chart. Here's the monthly chart. It always looks a little bit more wonky here because, there's so much stuff going on in a month, but you can kind of see we broke out. Look at that. Hit resistance, came down, broke out, keep on going, actually. Hit some resistance up here, came down a little bit, popped up there, consolidated for a little time, hit resistance, then came up, okay? Right now, our level of resistance for this month that we want to stay above, is currently at 135, 134.94 to be 98 to be exact, excuse me. But I think 135 is going to be good enough. If we close down below that by the end of the month, which is going to be about 5 or 6 more days, you're going to see probably another bad month coming, okay? If we can manage to hold this, we might have an opportunity to have a bear market rally leading into next month. But at this point in time, don't be cautiously optimistic. We're still pretty bearish here. Okay, now one last thing I want to let you guys know, and we'll be talking about more stuff here about Apple over the next few weeks, of course. This is just for like a beginner video, but we have another Fibonacci circles here, using the lows of 2020, and then that same box theory, spreading it out, but at the same time using a Fibonacci retracement level so we can try to find our levels of support. You saw this same Fibonacci support level here during the first couple charts that we talked about today, okay? On this one, we've actually already broken down below the circle, right? We've already broken down below. We had a little bit of support there, and you can see it was support down here. Now, according to this one, if we break down below the Fibonacci level, then we're going to be looking at a next level of support, probably around 126 or so. And I think if I'm looking at that correctly, and we do actually break down below this, all this is predicated on Apple breaking down below this Fibonacci level and that 2-to-1 Gantt level that we talked about. If that is the case, guys, I think a reasonable person can make the assumption using all of this information here that Apple could be going down to about the 120s level and then having a pretty sizable bounce after that. Usually when you hit some of these rings, you do see some nice things. Not many people like to actually use this tool because it is kind of a pain to set up, like I told you guys before. But I think it is useful, and I will make a tutorial for you guys soon, especially for Diamond members, on how to actually use some of these more complicated tools. Because they can be useful. Same with the Fib speed resistance arcs, which are pretty useful as well, but they're only half. So I'll teach you how to do like half on the top, half on the bottom. It requires you doing some math. So it'll definitely take some time, but I think it's worth it if you guys learn it. So to kind of wrap everything up, and you guys can see all these charts at the same time, let me just kind of zoom in here. There are a few support levels that you guys need to be watching out for. And let's go to the weekly chart here. Let's make this into a weekly chart, and let's make this into a weekly chart as well. Because you guys got to start thinking about this type of stuff as larger moves here, larger moves. 1 week as well, okay. And then let's drag this out here. Drag this out here, okay. So if we are going to have some fake outs here, all right, let me strike that for a second. We have a major level of support at 136 for Apple. Same one over here, about 137, kind of in that same ballpark. But looking over here at these Fibonacci circle levels, that those support levels at the moment are like around 134, a little bit below it. That's why you see we tapped right there. This is kind of more accurate one. So if you guys are planning to do a larger buy on the puts, I might wait for us to actually break down below this Fibonacci circle level, because there might be an opportunity where we look like we're breaking down, or we're just kind of getting tricked out here, or it's going to be a fake out, so to speak. And I want you guys to be prepared that if we can just break down below this level right here at about, for this week, let's go to next week, about 135, about $136, excuse me, then there's a good opportunity that, depending on which chart you're looking at, if we break down below that, well, let me see. 135, did I say? No, one more week. Yeah, let's just call about 135.50 or so. We can end up coming all the way back down to 125 according to this chart. For a longer term play, it might be bouncy, but we can get there. On this one, coming back down to 126-ish or so, using that Fibonacci level. On this Fibonacci level, coming all the way down to 124, and on this Fibonacci level, coming all the way back down over the next few weeks to probably 130, okay? So this Ganfin level is going to be important. We might have a bounce off there, but I don't expect this to be a full-on drop-off. I think we might get a little bit more choppy over the next few weeks, just because we're heading into this zone where there's a whole bunch of clusters of support, which doesn't mean we're just going to bounce and kind of go happily ever after. It more represents the fact that we're going to just be kind of sloshing it around, coming down bit by bit, and it's not going to look too nice. A good example of this for Apple would be, just to go back to the daily chart, kind of like this, kind of sloshy, right? We're just trying to get, we're breaking down, we're hitting a bunch of levels of support, but we're ultimately still going down. It's just that there's a whole bunch of fake outs during that time period. So it's going to require you to look at the weekly chart and say, okay, well, 2-3 weeks from now, we should be down according to all this data. That means I have to be able to hold these puts for 2-3 weeks and kind of, ride that wave. And to that effect, a lot of you guys will be talking more about options and the different types of options you guys will want to be buying. I will open up my TD Ameritrade account and we'll be going over different strike prices and stuff like that, and talking over some of the Greeks to see if things are overvalued, there's too much volatility in it, or that type of stuff. But that's for another video, okay? So to end off this video, guys, I hope you guys liked it. But the majority of the videos that I do for you guys, they are going to be off of what stocks or coins you guys want me to do technical analysis on, okay? So if you guys are a Diamond member in particular, I can tell when you guys comment. Let me know what exact videos you want me to do, what stocks and crypto coins you want me to talk about. That way I can start planning everything out, because I have a whiteboard somewhere along the ocean breeze, I don't know, somewhere. Just put it away. Oh, it's on my sofa, okay. But basically, I'm going to start taking notes on it, and I'm going to make a list. So I'm hoping to do this basic technical, this isn't basic, but I want to set up this technical analysis for you, show it to you guys as a Diamond member group, and then from there, what I'll be doing is going more in depth for each of the subsequent videos, because now after this first Apple video, we'll be doing a fundamentals video on Apple where I go over some of the 10K reports, some of the data in there, but also what I'll be talking about, and I want to tell you guys what the problems are. Also, once a week, we'll also be doing videos on the technical analysis behind it as well. So a weekly checkup of what's going on. Or if there's a day where Apple breaks down, you won't have a full-on video. It'll be like a 2-3 minute video explaining what's happening, what the breakdown is, and where the next level of support is, in case you wanted to take the opportunity. So that's where this part of the channel is going as far as the memberships are concerned. But this video is going to be open to everybody, and then from there, it'll just be for Diamond members only. But a lot of you guys have been asking me, what type of videos am I going to see? This is a portion of the videos you guys are going to see, okay? All right, everybody, thanks, and have a great rest of your day. Sorry for the long video.